Hello and welcome to Property Box News. I'm Simon Evison. Now, depending on who you listen to or read, post-Brexit, should it happen at all, again, depending on who you listen to, house prices may plunge 30% or the pent-up delay in activity could induce a surge of activity in the housing market. The Bank of England recently produced a series of scenarios that show we might be on the verge of the worst recession since the 1930s. A number of scenarios have been put forward that include a 30% drop in house prices. Now, it must be stressed this is not a forecast or prediction and should not be taken as gospel. Mark Carney is merely stress testing and showing what could happen. Meanwhile, another report by land agent Aston Mead suggests that during any political uncertainty, people tend to sit on their hands and wait and see until the outcome is more predictable. Planning Director Richard Watkins said this situation has led to an undeniable pent-up demand, especially in London and the South East, which is likely to make itself evident once Britain leaves the European Union. There has been little movement in house prices in recent months. The nationwide house price index reports a standstill in October growth and only 1.6% annually, the lowest in 7 years. However, Watkins believes that these circumstances could provide real opportunities for those buyers who are ready to trade up in the second quarter of 2019. From an investor point of view, what does this mean? Could it be there's a flood of property on the market, panic selling if the Brexit deal breaks down? It's perhaps too early to say so. We're going to have to wait and see. Property search agent Stack Property has also predicted a rise in activity once Brexit is sorted. The MD, James Greenwood, believes there are 6 million households in the wrong home and they're keen to get moving. He said, "Only an end to the indecision that we've been suffering since June 2016 can free up the market." The recent interest rate rise has had little impact on prices or activity levels. It seems there's a further interest rate rise of 0.25% expected at some point in 2019, lifting the base rate to 1%, while Mark Carney, Governor of the Bank of England, said any future rate rises will be gradual and limited. There are concerns, though, that a no-deal Brexit could send interest rates soaring. Under a worst-case scenario, the bank warns that interest rates could increase to 5.5%. But what effect that or smaller, more incremental rises will have on property market activity is less clear-cut. Meanwhile, Greenwood added cottages in tourist areas will be snapped up by investors jumping on the Airbnb bandwagon in anticipation of an increase in UK residents holidaying at home due to the falling pound, airport delays and Brexit fallout. And one of his best-known buying agents at Stack's Property Search advised that well-located individual plots of land, derelict properties and refurbishment projects will be snapped up by idealistic buyers who want to create their own customised space and add value to their investment. In the right circumstances, of course, a good buy for the professional investor. So, how do you see 2019 panning out for the investor? Leave us a comment below, we'd love to hear from you. Now, meanwhile, during all of this Brexit malarkey, the tenant fee bill pushes forward and, according to the report submitted by the Housing, Communities and Local Government Select Committee, the deposit a landlord can take will be capped at 5 weeks. And that's a U-turn from the 6 weeks announced in the autumn budget last year. The argument from ministers is that moving is difficult and high fees and upfront costs make it prohibitive for many tenants. That said, if a tenant is a good, responsible tenant, they should have their deposit from their current home available to carry over to the next tenancy. And actually, banning of excessive letting agent fees would be more helpful to them. So what this does is make it actually more difficult for the landlord. David Smith of the RLA says ministers claim that they want to cut the cost of renting, yet this is another measure the government is making that will further cut the number of landlords and properties available as demand continues to rise, so actually driving rents up. The tenant fees bill has completed its passage through the House of Commons and is nearing its final stages of consideration in the House of Lords. John Notley, the CEO and co-founder of Zero Deposit, is among those that welcomes any proposed changes to legislation that will enable tenants to move more freely. But he believes that it is not sensible to impose a cap that after a single month's rent leaves landlords with very little protection, he commented, "The objective in terms of improving tenant affordability is both clear and necessary, but there are already services on the market that offer the same protection as a traditional 6-week deposit for the landlord at the cost of just 1 week's rent to the tenant." It's clear then that the rental market needs reform, but not in areas where solutions already exist to address its problems. So again, what are your thoughts? Leave us a comment below on how you feel the tenant bill might affect you. That's all from me. Don't forget to like, share and subscribe. See you next time. Goodbye. The recent interest rate rise has had little impact on prices or activity level.